In this segment, we're going to talk about assets to close and how much money do I need to buy a home? And I'm sure you have a couple of questions for me on that.
Well, our first question is, how much would we be expected to have for a down payment?
Excellent question. Ideally, to get the very best interest rates and terms, you want to put 20% down on a loan. That's a lot of money. So there are loan programs out there that have different insurances that will allow you to put less money down. For example, we have VA if you're a veteran and have that qualification, FHA, rural development, and then conventional mortgages with PMI. So depending on income and programs, some of those could come up with next to 0% down, and then maybe as little as 5% down for your mortgage.
Great.
And so what are the closing costs and how much should we expect to pay in closing costs?
Closing costs, again, a good question because those can run up quite a bit without you realizing all the work that goes into a mortgage. So what I recommend is when you're meeting with your lender, ask for a good faith estimate of closing costs, and that way they can break down all of the different origination, underwriting fees, how much title and settlement, what the appraisal and credit costs, what do you need to set up an escrow account, are there any odd days interest. They'll put that all together for you and give it in a nice report so that you know exactly how much money you need in addition to your down payment to buy your home.
So who pays these closing costs? Is it always the buyer, or does the seller take some of it?
Typically, the closing costs are paid by the borrower. However, sellers, and we've seen several contracts come through where the sellers do help out. So when negotiating on a home and you want some assistance with the monies, ask the seller. Just keep in mind that there are limits as to how much the maximum that they can contribute. But we see contracts often that come through with the seller giving assistance. It truly does help.
Great. So you had mentioned an escrow account earlier. What is an escrow?
An escrow account is a separate account that we set up with your mortgage payment. And that takes care of your taxes and your homeowner's insurance. And then if there's any other PMI private mortgage insurance is required on the loan. So it's basically taking 1/12 of the annual bill and putting that in with your mortgage payment, and that way it's all paid with one payment, and then when those premiums come due, the bank takes care of making all those payments for you. That wraps up our assets to close portion. For more information, visit our website at banksis.com or visit my website, banksis.com/Kim.